2014 was a remarkable year for the Irish commercial real estate market, both in terms of value improvements, but particularly in relation to transaction volumes, with transactions in almost all sectors up significantly year on year. Indeed, Irish commercial real estate was one of the best performing asset classes in the world in 2014. Over $4.5 billion of investment transactions were recorded, and over $21 billion of Irish loan sale activity was recorded in the 12-month period. The year passed in a haze of loan and asset sales, but remarkably, there were quite a number of developments over the course of the year. Most significantly, the decision by NAMA to accelerate their deleveraging programme. We had the ending of the capital gains tax waiver. We also had the formal adoption of the Strategic Development Zone, or SDZ, in Dublin Docklands, which will be very significant in the market over the next number of years. Pricing sharpened in line with what was seen right across Europe over the last 12 months, with yields converging and a very significant gap emerging between interest rate, bond rates and real estate returns. We saw an increased focus on retail investment, with quite a lot of shopping centres and retail parks being traded around the country and generating strong demand from a range of different types of buyers. We saw severe supply shortages in some sectors of the market, most notably the Dublin housing market and the Dublin office sector, which in turn led to very sizable rental and capital growth in many sectors of the market over the last 12 months. So all in all, 2014 marked a very pivotal year for the Irish commercial real estate market. So what is 2015 likely to bring? Our view is that we're going to see similar volumes of transactional activity being recorded in the market this year, both in terms of loans and asset sales. Another key trend for 2015 is a significant increase in the number of secondary retrades from many of the properties and assets that were sold over the last number of years coming back onto the market again. Another key trend for 2015 will be an increased focus on provincial and secondary assets, as the recovery that has been manifest in Dublin over recent years begins to spill out to other locations, with rental and capital growth coming through in many more sectors and locations. We're expecting to see strong volumes of activity in all of the occupier markets, office, industrial and retail, with a particular increase in activity in the retail sector of the market as the economic recovery takes hold. We're going to see some investors moving up the risk curve to some extent in 2015. Some investors clearly won't be able to rationalise pricing in the current market and will move up the risk curve into other alternative sectors. Some indeed may leave the jurisdiction, but equally we will continue to see new entrants coming into the market. We expect to see some investors focusing their attention on intensive asset management over the next 12 months. In terms of concerns for 2015, while we are encouraged by the volume of activity in the Irish domestic economy, we have to be mindful of macroeconomic threats that are looming on the horizon. We need to be very mindful of what's going on in the Eurozone. We need to be mindful of the bureaucracy that's involved for many occupiers in setting up new businesses and something that can threaten the market. We need to be very mindful of changes to tax law. The removal of the double Irish doesn't appear to have had any material impact on occupier activity to date, but we cannot remain complacent. Equally, we need to be mindful of changes to corporate tax law in Northern Ireland, which could have an impact on FDI flows into the Republic over the course of the next number of years. There's still a lot of uncertainty in the market around proposals by the Central Bank on mortgage lending. There's uncertainty what the new Planning Act that will be launched in 2015 will have, and the implications this might have for development. There's also issues around competitiveness. We've seen very rapid rental growth and capital value growth in the property market over recent times, and we need to ensure that we remain competitive relative to other jurisdictions so that we don't lose FDI. There's also some political concerns and a lot of questions being asked about political stability into the medium term, which we need to be mindful of. So while there are clouds on the horizon, the overall sense is that 2015 is set to be another very busy and strong year following the year just gone.